Dominic, thanks so much for your time. I mean, getting into the numbers in just a moment, but in the interests of time, I'd like to kick off with the announcement of your BEE deal.
Yes.
Give us a bit of color into exactly how this will benefit workers and which workers it will benefit exactly.
Thank you, Fifi. I think just to give you context, we did a BEE deal around 2008. The deal didn't go as well as we anticipated. We unwound the deal about 2-3 years ago. And we thought, you know, if you're going to do another deal, it's important that we start looking internally first and say, who are the people who make a difference to our customers? You know, who are the people who are loyal to us, who understand our business? And clearly the employees are the ones who understand it. And therefore this transaction seeks to empower 14,000 employees, you know, across color line, across gender, to ensure that, you know, these employees also, because they live in South Africa, from a janitor right up to, you know, a CEO of the division will participate in this transaction. From a point of view of assisting, you know, the funding for that, we've been able to raise funding, you know, through the banks. So, because this deal is underpinned by property.
Right,
so basically we'll be selling properties to the BE enterprise. But more importantly as well, we've actually established a foundation which is going to be a permanent feature. And the foundation seeks to focus more on education, poverty alleviation, and youth advocacy.
Okay.
So, and that really are the salient features of this transaction.
Interesting you say that your deal goes across racial lines.
Yeah.
Why so? Because traditionally you think of BEE, you think of the black workers that were marginalized under previous dispensations.
Yeah, I think, you know, previous BEE deals tended to focus really on, you know, highly politically connected people, you know, and wherever you saw broad base, it will be some trusts, you know, in some communities. But for me, I thought, you know, when you have your employees, you know, those employees also are South Africans.
Sure. They
were also disadvantaged, you know, and therefore they also are entitled to be empowered. But I think if you then cross the color line, I think it's important that what we do would be, we also engender, you know, the normalization of a society, because it doesn't mean every white South African is rich. You know, they're privileged, yes, but what we're going to also take into account is the EAP, the way we're going to allocate the shares. Right. So the black, you know, or you know, individuals are likely to get more compared to the white individuals, but overall, everybody is going to be engaged.
I'm wondering if maybe you took, or you drew some lessons from the way that Sasol constructed their BEE deal, given the resistance from white workers there who were not included?
No, not at all. I think we took the lessons from our previous deal. What we did with the previous deal, we employed all the employees except white management. And that didn't go down well in our organization. We didn't have an external, you know, factor influencing us. But I think it's important that, you know, it's one thing to comply legally, because there's nothing wrong legally that Sasol has done. But in our view, being legally right is not necessarily the correct way to do. You also need to be socially conscious.
All right, so let's talk about the business now. So you have reported quite a big jump there in HEPS. Let's talk about what is happening in Russia, because I see that they were quite a big player there. Yeah. I mean, first of all, what drove such demand? And secondly, the sustainability of it, given all the moving parts the Russian economy is facing via tariffs, via the oil price, and the like.
Yeah. Fifi, we've been operating in Russia for the last 20 years. And during that time, we've built capacity in terms of investing in facilities, investing in technical competency, and the customers in Russia love us, and they love the Caterpillar product. And notwithstanding that, you know, the commodity prices, you know, was very high, you know, over the last, you know, 2-3 years. And that of itself, you know, necessitated that the customers buy equipment. We've had large order books that we've now delivered, you know, to the end of this financial year. And that's really what underpinned the growth in Russia. I think it is a historic high in the 20 years that we've been there. But if you look going forward, though, I don't see us achieve the same level of growth, particularly because you cited the socio-political issues, you know, between the US and the Russian government. But our view is that notwithstanding that, you know, our customers are willing to pay that extra levy, you know, because they understand that they're buying a quality product, but they're also buying the support that Barloworld gives them. And the fact that we've got a inbuilt population, it provides us with an annuity income, you know, going forward. Sure. So it will buffer, the current headwinds that we have.
Sure. I mean, talking about income from other sources, your joint venture there in the DRC, also a beautiful performance this time around, very, very strong. Again, outlook, I mean, we do know that demand for copper and cobalt remains robust, but outlook for Barloworld within that region going forward, and especially as the political risk premium has to somewhat be factored into.
You know, if you play in emerging market, you've got to always factor the political risk premium. And we've been operating in that part of the world for almost more than 20 years there as well. We always on the alert. We've got people on the ground, we've got locals, we've got expatriates working there. So we're really, are in touch with what's happening. But I think for me, medium to long term, I'm very positive on particularly on the cobalt side. I mean, the production of cobalt and the demand of cobalt is very high. So, and obviously copper prices, if they remain at these levels, I think we'd like to see a good year next year.
Shift focus to Angola now. Quite a lot happening there as well. You've managed to take out some monies, but you've still got some, is it some $10 million dollars trapped there? What is your feeling about operations in Angola going forward? And I mean, how soon before you're able to get that money out too?
There's two things obviously that's taking place in Angola. Firstly, is the political change, in terms of change of regime, which, almost like South Africa, they're cleaning up the government there. Secondly, the oil price. Whenever the oil price, goes below $70 per barrel, the government tends not to invest in infrastructure, and the previous government didn't even invest in production of oil, and that has impacted, the level of activities in Angola, as well as, availability of currency. So we've seen an improvement. We've released, some capital out of the trade, but not much. But we've also constrained business activity, because the more you sell equipment in that business, you generate more kwanzas, but you are able to extract your dollars. So our view is that it's going to be probably a wait and see for about a year. And I think if the prices maintain, I think we're going to see a better improvement in that space.
Okay, so like many companies are bringing it back to South Africa, operating here, you've had to do a lot of chopping and changing to ensure that you are efficient and profitable in the South African economy, and you did quite a bit in your logistics division, which you are proud of. You say that it's gone ahead of your own expectations. You talk about or the next phase, or phase 2 of this turnaround, exactly what this entail, and exactly what does this mean for the money that shareholders pocket at the end of the day? Yeah,
I think we measure ourselves in terms of return on invested capital, all our businesses, and our cost of funds in terms of our WACC is about 12.5%. So all our businesses need to be able to wash their face, but we have put a hurdle rate of about 13%. So when you look at the logistics business, albeit a great achievement, but they're way off in terms of invested capital. So next year, which is 2019 September, I'd like to see them being close or at that cost of funds. And beyond that, they must start really generating above. Then they will warrant that I give them more capital to go acquisitively.
All right. Well, Dominic, thanks so much for your time. We will leave it there. Of course, that was Dominic Sewela, who is the CEO of Barloworld.